The Schwab US Dividend Equity ETF, ticker SCHD, is pretty popular amongst dividend investors who don't wish to put in hours and hours researching individual companies but still want to own a piece of that sweet, sweet passive income action. But it's missing an important part of a well-balanced and diversified portfolio. Hey, what's up? I'm Russ, and I'm sharing my journey, thoughts, and ideas here in the world of passive income through dividend growth investing, where we're all about making money. And if you're all about seeing your money make some money, then come join us. And all the ETFs talked about in this video have links to their fund pages in the description below. So the SCHD ETF, the exchange traded fund that is, was created in October of 2011 and focuses on the quality and sustainability of dividends. It has 103 total holdings, a current share price of $67.16, a dividend yield of 3.73%, and an expense ratio of 0.06%, meaning that for every $1,000 invested in SCHD, Schwab will keep 60 cents a year as an expense fee. Now, according to Bankrate.com, an expense ratio measures how much you'll pay over the course of a year to own a fund. So it's basically the management fee paid to the fund company, in this case to Charles Schwab, for the benefit of owning the fund. Now, this ETF is market cap weighted, so the top 10 holdings change frequently. As you can see from the inlay from June, the top 10 are still the same. They're just shuffled around in a different order because these companies' market cap changes daily. And all that the market cap means is simply when you take the current share price, multiply it by the number of shares outstanding, that gives you your market cap. And when it's weighted like it is in SCHD, all that means is the companies with the higher number market cap move toward the top of the holdings. And SCHD has had a very nice dividend growth, sporting a 10-year compound annual growth rate, or CAGR, of 34%, and it pays every March, June, September, and December, currently totaling $2.48 annually. But there's a little bit of a problem with SCHD, and that is it has zero real estate exposure and minimal utility holdings. Now, this is possibly because both of these sectors are really sensitive to interest rates, and when the rates rise, income investors look towards the safety of fixed yields as those such as of bonds. But utilities and real estate tend to make up two of the highest yielding sectors of the market. So if one was to make SCHD a core position of your portfolio, I think it would be wise to possibly supplement, meaning add in some real estate and utilities. And two ETFs that I think could get the job done are as follows. The first one, which keeps it in the Schwab family, is the Schwab US REIT ETF, ticker SCHH, which gives us simple access to 135 REITs, which are real estate investment trusts, and it excludes the more volatile mortgage and hybrid REITs. Now, SCHH is currently trading at $17.79. It has a very low expense ratio of 0.07%, or 70 cents per $1,000 invested every year. And SCHH is also market cap weighted and was created in January of 2011. And check it out, there's lots of solid and popular dividend paying REITs in the top 10, including two of my favorites in Realty Income, ticker O, and Simon Property Group, ticker SPG, and this has a current yield of 3.34%. So many real estate ETFs have struggled over the last few years, and as you can clearly see by SCHD's negative 5% 5-year CAGR and slow 4% 10-year CAGR. And this ETF also pays every March, June, September, and December, currently totaling 49 cents a year. So I think there's a lot of great individual REITs that have many years of proven dividend growth, like a Realty Income. And because it's what I do, I would rather invest in those, because remember, when you invest in an ETF, you are buying a little sliver of every single company that's inside of that ETF, for better or worse. And for our utility exposure, I'd feel comfortable with the Vanguard Utilities ETF, ticker VPU, which will give you instant exposure to 65 utility companies. Now, this was created in January of 2004, is currently trading at $134.20, has a yield of 3.12%, and an expense ratio of 0.10%. And many favorite dividend growth utilities are found in the current top 10, including one of my favorites, Duke Energy, ticker DUK. Now, VPU pays every March, June, October, and December currently, and that totals $4.45 annually. And if we zoom out and look at the 10-year total return of these three ETFs, which means all distributions reinvested into the funds, we see that SCHD is far and away the winner with a 213% return, while VPU returned 132%, and a distant third at 50%. Now, there's many ETFs that you can invest in, and I'd love to know what your favorite ETFs are in the comments below. And I'm currently using 2 ETFs to build out a fund to hopefully one day pay for both of our daughters' future weddings. So in the little tiny box right next to my head, I'll show you which two those are right there. And if you click this box next to my head, I will see you there.